right, everybody, we are back in action. Good morning. Welcome back to the morning show here on Stock Market TV. Spencer Israel, JC Parets. I don't know we'll have Steve Strazza today, but that's okay. You got me, you got JC, you got Alfonso, and we got you. We got chat. What's up, chat? How we doing? We missed you guys. You missed us? Hope you guys enjoyed the last couple of days. We had Kenny Glick doing his thing on the channel. Amazingly, and then yesterday, if you weren't here yesterday, you missed it. We actually kept Kenny's stream up all day. Essentially, his room was open from 9:15 till like 4 o'clock yesterday, ripping through trades, talking through strategy, and he had some good ones this week. So if you missed any of those replays, I'll drop the link in the chat. You want to see how he does it every day, a little bit more in depth than what he does on our show, obviously, because he comes on here for 5 minutes, talks about what he's watching, and that's that. But it was really, I spent pretty much all day yesterday watching Kenny's room, and it was awesome. So regardless, we're back. You're back. Good to see you. Good to be back. Let's start the show. We got John Salama on today from Maverick Trading, and we'll catch up. We got a lot of things to catch up on, right? Because we haven't talked about things for a few days. So let's catch up on some things and see what's going on out there. Smash the like, please.
All right, Spencer Israel, what is happening, my man?
Miss you guys.
Good to be back. Good to be back. Flew in a little red eye this morning, just catching up. Busy few days, I got to tell you, down at good old Stocktoberfest. Great conversations, talking retail with Jeff Mackey. Jeff Mackey, big fan of ours. Big news we got with Jeff Mackey. We'll be dropping that news shortly. What else? I was talking to Herb Greenberg about good short ideas. Herb coming in from the forensic accounting perspective, a perspective that I am quite unfamiliar with, which I love because he gives me ideas, and some of them I wouldn't short with my worst enemy's money, and some of them are kind of interesting. But like I was telling Herb, whether I agree with you or not, it's not the point. I really like the idea flow. Hanging with Nicky Montana, Joe Montana's son.
Nice.
I'm having lunch with him. He lives in New York. He lives in Soho. I'll be having lunch with him soon. He started the Robin Hood of meme coins. So what's really interesting is, generally when you're looking to trade, on chain, there are wallets and you got to move to this wallet. And if you send the wrong currency to the wrong wallet on the wrong layer, you lose the money. And it's like a thing. Like there's like 7-8 steps along the way. And at any one of those steps, you could just accidentally lose all of your money. And that's not comfortable. I've been there. I'm like, yeah, should I really send this? And then I'll send like a little bit, see if it goes through, and then I'll send the rest. That's kind of been my, my risk management for that sort of stuff.
Yeah.
Now, for people who are not interested in the blockchain at all, they don't care, they don't want to know, they just want to trade tokens in a very easy way and not have to worry about all the other stuff. And Nicky Montana's company built that. So like they spin up the wallets on their own end. Like they do all those things. So if you trust them, then you're good. If you don't trust them and you want to do everything on chain, that's a whole nother thing. But this is specifically for people who don't want to worry about it. So I needless to say, very interesting conversations over the last few days in San Diego at Stocktoberfest. Traders, investors, entrepreneurs, people building cool things. Definitely a bull market party for sure. I don't know. I had pizza in California that was pretty good. I'm not gonna lie, it's pretty good. Pretty good. I wanted to make fun of Howard so bad. Like we come all the way from the East Coast, you bring us to a pizza place. But it was pretty good.
If I'm not mistaken, this was the first Oktoberfest in a minute, right? It had been a while, I thought.
Probably since 19, I think.
Okay.
Since 19.
And it was good, and the vibes were good?
The vibes were good, not like super optimistic and bullish, like crazy rah-rah. Just kind of general, good mood, people having a good time, everybody's making money. It's a bull market for sure. I came in hot, with my charts, and, people were a little, people thought I was a little too optimistic. So, that's a good sign.
Yeah, question for you on that. How many of your charts did you? I knew you had. I think you had what? You had like 150, maybe. How many did you
Let's
actually
see.
get
I'll
through?
tell you right now how many I got through. In 25 minutes, I got through 150 slides.
Oh my God, you
That's
actually
pretty
did.
good.
But that wasn't all of them. There
That
were more.
wasn't all of them. They cut
Yeah.
me off. Well, it was bullshit, is really what it was, because I asked for 5 minutes more. They gave me the 5 minutes more. So I had 30 full minutes. And then they literally took 5 minutes away from me. So it not only did I not get the 5 minutes, they took five out. So I only had 20 minutes. And then Lindsay pulled me off the stage. They had to get up there and get me off because I was going to keep going.
Yeah.
So they brought in,
You got to keep the trains running on time at these events, man.
bullshit. They were already behind. It didn't matter. It was a good time, though, guys. If you've never been to Stocktoberfest, the chilaquiles I had were off the charts. Fantastic. Fantastic. All right, let's go.
I like it was fun. All right, let's talk markets here. What's going on?
All right, ladies and gentlemen, this morning,
Looking good.
I wanted to. This is not what I want to do. I guess we'll figure it out. All good. All right, so we got Dow futures doing nothing this morning. Dow's flat, down 38 points, 42,700 for the Dow. S&P 500 futures up 50 basis points, just under 5,900, up 30 handles on the day. The Nasdaq 100 futures, Spencer, up a full percent this morning. That's 200 points for the Nasdaq 100 futures. You got 30-year bond futures down to 118. Up 25 basis points this morning. You got oil up almost a full percent, back above 71. Copper up almost a full percent, 437. Gold up almost a full percent, 2750. Silver up 1%, 34 and a quarter. With the volatility index still hovering right around 19. And of course, over in the funny money, Bitcoin up 735 points this morning. That's 1%, 67,300. You got Ethereum flat on the day, 2528. And let's see, total crypto market cap, Spencer Israel, we're looking at about 2.26 trillion, and Bitcoin dominance, which was certainly a topic of conversation, just under 59%. What stands out in the futures this morning? And then we'll get into Tesla. All
right. In the futures, not a whole lot besides the fact that we're mostly up right across the. I mean, not everywhere, but we're up most places. So,
Tesla, Tesla's up a whole bunch.
Yeah, Tesla's up a lot. So
Tesla is up a whole bunch, 13% last I checked.
So I'll start doing this thing where I ask Microsoft's AI, was blank's earnings good or bad? Just curious what the AI says. And the AI says Tesla's earnings were mostly positive. I'll just read the whole thing. The earnings per share surpassed expectations and they achieved solid revenue numbers, but they fell a bit short in automotive revenue. However, strong profit margins and an optimistic outlook for future growth, especially with plans for more affordable vehicles and autonomous technology, make it quite an overall win. Investors seem happy. And then it ends with this. How do you feel about Tesla's direction? It asked me how I feel about it.
Really? That's interesting. Maybe they taught the AI how to be polite, maybe?
Maybe.
That's cool. Anyway,
it obviously, the initial reaction is, it's up 14% this morning. So it was good. I didn't listen to the call. Sometimes I do because it's Elon. He says some funny things, but I didn't do it last night. But yeah, the reaction again. The numbers are what they are. It's not about that. It's about the reaction, right? So I think we should have a chart here somewhere, and let's bring it up if we have it.
I got it. It's there.
It was good. I mean,
up 14%, still within this range, but it gets back to the rotation into consumer discretionary in general, and sort of that thesis that if this is a bull market, is consumer discretionary going to complete a 10-year top relative to the rest of the market in the middle of a bull market? I don't. That's not the bet that I want to make. So if consumer discretionary money is going to continue to rotate into discretionary, you got Amazon reporting next Thursday. I got a hard time believing that Tesla isn't going to do well in that environment. And sure enough, here it is doing well in this environment, right? Got a nice little island reversal situation going over the last week or so after that gap down. Now we're getting the gap up. So that's leaving a lot of shorts getting squeezed. We love that. Also, you got the political thing, people that don't like Elon Musk and they think he's too Republican and, like those kind of people. There's a lot of those. So I love that, right? We love when people are angry at a company for reasons that have nothing to do with the company, right? And just try to bring their politics into trading. We know how that works out. So this is one of those names, definitely. Has been for quite some time.
Henry says that was the best conference call he's listened to.
Who said that?
Henry in the chat. Best, I assume, meaning positive, right? Like, well, like the vibes were good. So good, I guess. If you're testable, great.
Yeah, and I am. Obviously, I'm long. I think it goes a lot higher. I think, I don't know what's going to happen, obviously, but I continue to believe that the risk here is that this is the largest company in the world and I don't own enough, right? To me, what is the risk here for me selfishly? That this is the largest company in the world, first to 5 trillion, potentially first to 10 trillion. I don't know. I have no idea. But the risk versus reward, the risk was so well defined, that it doesn't even matter how high it can go. The reward is exponentially greater than any risk that we were looking at. So, like I said, I still think that. I still think the risk is, kind of like a Bitcoin situation. If Bitcoin breaks out, the risk is that, this thing goes to 250,000 and I don't own enough. Like in my head, like that's my risk. I think Tesla's one of those. And especially with the, with the political thing, people don't like Elon. I love that. It's great. Like in the chat, Elon too chaotic for me. Perfect. That's exactly what I want to hear. That's exactly what we want to hear. So good.
What's the it's the chaotic good, chaotic evil, right? Chaotic neutral, right? Elon's definitely like probably chaotic neutral. I don't know. It's pretty chaotic.
I guess I don't know what it has to do with the stock. You know what I mean? Like people like, not you specifically, but people love just like bringing things that don't matter,
Yeah. And the more you talk about that, the more I agree, right? It's almost like sometimes it takes repeating the same message over and over again for it to really sink in. And I've come around to that in the last 6 months or so, which is like, and when I'm referring to the fact that you enjoy when people get like distracted by things that don't have to do with the price of the stock. And
and it's not so much like enjoy as it is try to extract money from people who are not mentally strong enough to overcome their political biases in the market, like those types of people that are making donations in the market. It's up to us to take that from them. You can see it in a similar situation like in Disney. The Republicans think like Disney's too woke or whatever. Great, fantastic. The more the Republicans hate Disney, the better. Right? The more the libs hate the Tesla, the better, right? So it's not like, oh, let's pick on these people and not pick on those people over there. It's not like one is better or worse than the other. It's the same thing. People are angry at a company for reasons that have nothing to do with the company and they can't overcome their political biases. And that's great. That's just human nature. So it's up to us as investors to take advantage of that human nature, right? Those are human flaws. The other thing that, an interesting topic of conversation that we had was on the poly market. Can you throw that up? Because I got some thoughts. A bunch of us actually like pretty much agreed on our thoughts here. So you've got the election, the betting odds. You could throw up the poly market. This is the first like decentralized exchange, quote unquote. And Trump has obviously just completely skyrocketed over the last few weeks and Kamala's completely fallen apart. So the argument is that there are 4 people behind the scenes manipulating this market and it's bullshit and you'll see, right? So maybe we will see, right? Like maybe it, Elon and the other guy, what's the guy that owns this? Peter Thiel. Maybe they are manipulating this market so that people vote Republican, maybe. But when these guys are entrepreneurs and they're successful businessmen, are they just going to destroy this company for one election? Because if they are manipulating all these things, then it's just, and everybody knows it's all a fugazi, then it's over. So are they really going to do that?
That's
Like,
what we're
that
going to
doesn't make
find
any
out.
sense.
That's what I can't wait to find out. I can't wait to find out, with the benefit of hindsight,
Yeah.
how good were these markets actually?
Yeah.
Right.
My bet, and it has been since the beginning, is that these are very accurate, in my opinion, based on my experience of supply and demand. And if you're a conspiracy theorist about the manipulation, from a business standpoint, that would just be a bad decision. Like, that the company's over after that. So, like, I don't know. And then when you go to some of the other exchanges that Peter Thiel does not own, you're getting the same data. So here you're looking at Polymarket. Here you're looking at Kalshi. Same thing. Donald Trump ripping, Kamala completely falling apart, and then predicted same thing. Donald Trump ripping, Kamala completely falling apart. So, and then you're seeing it in the market as well. The market pricing in a Trump victory already. So if something completely crazy happens and Trump does not win by a landslide, like all the data is suggesting, you're looking at a big market correction, where you're looking at banks down 10% overnight. You're looking at the Dow futures down 1,500, 2,000 points potentially on a Trump loss. And that's not what I think happens. But if you're wondering, like, if there's like a crazy surprise in the market and all these things are completely wrong, which I don't think that's the case, and certainly not the bet that I'm making. Yeah, Trump wins by a landslide. Market already priced that in, already moving forward, in my opinion. So those are some interesting conversations we had over the week
And
that I kind of wanted
did
to,
you say that there was you said there was a consensus? That we said, like,
amongst a consensus amongst our team that what I just described is accurate.
Okay.
Like, can they be manipulating it? Probably. Is it in their best interest to manipulate the market? Definitely not. So I don't think they would. I think that's just stupid. And then when you look at the other markets that Peter Thiel doesn't own, they're all saying the same thing the Poly market is saying, that Trump ripping and Kamala falling apart. So, like, I don't know. I don't buy the, the betting odds, don't trust them. Like, I don't buy that. I think you do.
I also look at it as, like, the closer you get to the election or any big date, the closer you get to something, the more smoke there is and the less fire. Like, everything is a misdirection. It's almost like all the rumors that come up like the day before the NFL draft. It's like you can't believe a word of it. It's all posturing and people.
What was that offensive lineman with, like, the weed mask? Remember?
Oh, I do remember.
He's still in the league. I saw him the other day.
He's still in the league.
He's still in the league.
Still in the
pretty
league.
good, actually, as it turns out.
Yeah. Anyway, all right, we're 2 weeks out. Hopefully, it can't come soon enough. What else? Can we do some more earnings or?
I got something that I wanted to share here. If you want to start with slide 7. So this is one of the things during my presentation that I think hit home the most, or at least, the one that got the most laughs and chuckles, so you got this dollar bill rocket ship situation happening here at the Economist, which, if you're not familiar with the Economist, imagine a bunch of journalists parading around as economists. Like, what could go wrong? So as it turns out, these journalists that parade around as economists, as it turns out, they're great at creating very, very clever and creative cover stories at exactly the wrong time. So here they are telling us that American equities are the envy of the world, and there's no stopping it. So I'm probably going to take the other side, because go back and look at some of this history. Spencer, keep going. So here we're looking at monster uptrends. These are the United States stock market relative to developed markets outside North America. So think U.S. in black, U.S. versus a lot of Europe, Japan, Australia, like developed markets, right? And then in blue, you're looking at the United States relative to emerging markets, right? And as we know, we've had huge uptrends in the United States. The United States has been outperforming for quite some time, continuing to make new all-time highs relative to developed markets.
That's recency bias, JC. Come on.
No question. But think about it. These magazine covers, they weren't telling us this in 2012. They're telling us this now, right? Word's gotten out, Spencer. Word's gotten out. Go, next slide. So this is, people appreciated this. You got the almighty dollar, right? George Washington muscle man. America's currency, the world. What does it say? The world's problem is the mighty dollar. So see what happened after that magazine cover in December of 2019. The Mighty Dollar magazine cover comes up and the dollar completely crashes. It looks like a chart of Kamala Harris's odds of winning, actually, right? Just completely collapsing there. And the S&P 500 absolutely ripping, right? Because there was a very strong negative correlation. So the Economist magazine tells us, oh, the mighty dollar, it's so strong. It's a big problem. Nope. Completely collapses. Next chart, Spencer. We saw something similar a couple of years ago where you had George Washington jumping out of a dollar bill wearing a tank top, flexing his biceps. And of course, when you see something like that, probably not a bullish indicator for the dollar. And of course, once again, the dollar completely fell apart on that, right? So again, not to pick on Barron's too much. What we're trying to do is pick on the Economist specifically. So shout out Barron's. Didn't mean
but
to.
Also, in fairness, like the dollar had been ripping, right? Like,
no, I know. I just feel
right.
bad. Barron's catching strays. Like, we're trying to pick on the Economist here. So my bad, okay. Barron's. But I mean, I had to. I mean, George Washington jumping out of a dollar bill with wearing a tank top, flexing his biceps. I mean, you earned this one. Next chart there, Spencer. So here we're looking at, so this is in February of 2020. We're looking at stampeding robot bulls. Stampeding robot bulls. Spencer Israel, stampeding robot bulls, huh? All right. See what happened to those technology stocks immediately after that cover story.
I know you're gonna say that breath had already peaked, whatever it was, right? A few months prior.
Go ahead.
Yeah, okay.
So after the stampeding robot bulls, talking about the big tech, they all completely fell apart.
I think it's fair to say that magazine cover did not foresee a global pandemic. But
wow, I can't believe journalists and economists completely missed that deteriorating breath. I can't believe
it. I knew. Yeah, you're going to talk about.
I remember this cover story well because we were already short, right? Like we were already bearish. We were long bonds. We were already short, and then this comes out. I'm like, oh my god, Merry Christmas, JC. Next one. So then a month later, this is the best one of all of them. Earth closed.
That's pretty good.
Just closed. Earth just. Not open anymore, right? Earth, like really? Earth closed? All right. How'd the stock market do after Earth closed? Let's see here. After Earth closed, we got the greatest 52-week period in the history of the United States stock market. How about that? How about that? So Peter's telling me that magazines are roughly 50-50 coin flip. No, they're not. They're actually a much better indicator than that. You might be looking at the wrong magazines. The one we are focused on here is The Economist, and whoo, they are as good as it gets, Peter. You must be new here. Welcome. And then let's remind everybody what just came out here now. The Earth closed, Rachel. I mean, you can't make this shit up, right? Earth closed. I mean, come on.
That's a good cover, actually.
It's a great cover. It's a great cover.
They're all good. They're all good.
The greatest new 52-week, the greatest 52-week period in the history of the United States stock market after Earth closed. And then just show the one that just came out one more time here. Keep going.
Oh, this is the, yeah.
And then, so this one just came out now. So now after this monster move higher, now they're telling us that the United States is going to outperform moving forward. I don't think so. I don't think so. Shout out Economist. Appreciate you guys. If and when they go out of business, because who reads this stuff? We're going to start We're going to start a GoFundMe account and make sure that this magazine stays in business. We need them on that wall. We need them.
Not so fast, JC. That video that we all watched a few weeks back about how to do marketing copy had talked about this famous Economist ad from the 90s. And the whole thing is that nobody reads them. That's what makes it exclusive, is that nobody reads it. Like 5 people, not really 5, but you get the idea. 5 people read this magazine, right? And that's what makes it exclusive, and that's what keeps it around. So I think they'll be okay. I think they'll be okay for a while.
I hope so. That's the point. I'm rooting for them for selfish reasons, obviously. But yeah, so, during my presentation, we talked about a lot of different things, but like sort of that rundown and sort of a reminder. Even Strazza was like, holy shit, I forgot about that one.
They're good. They're good.
They're good. They're good. You can't make this Earth closed. I mean, come on. Too good. Too good.
Again, at the time, Earth was kind of closed. I'm just putting it out there. All right.
Ready? whenever they tell you Earth closed, just buy everything. Just buy any stock you can get your hands on. Just buy them all. It was literally the greatest 52-week period in the history of the United States stock market, starting with the day that the economist said that Earth was closed.
Ooh, when inverse economist ETF. Now we're talking. It could happen.
There's like a portfolio. Some guy does something like that. He's got like a magazine. There's a guy.
There's a guy.
It's not an ETF, but he's got like a portfolio, like a live public portfolio, and it's all the covers.
Cool. Hey, let's bring on Kenny Harrett.
All right, bring him up.
All right.
It's been a long time coming. They ain't come from my club, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Ooh, Kenny Glick in the house. We're
Hey.
back.
Welcome back, boys.
We were looking at videos from like Stocktoberfest, like 8 years ago, 9 years ago.
Oh,
Did you
really?
see the video I dropped in there?
Well,
I don't know, but did you
No, I
find? I was on when Cheddar was getting their thing started, and they did an interview with me, and they said, "What's your top pick?" I said, "AMD by far here at $3 because Goldman Sachs just downgraded it, and
Love it.
I don't. It's somewhere." But you guys were just talking about contrary indicators. There was one of the most important contrary indicators I've found in the last 10 years is the Josh Brown bottom. Josh was telling people to get into Roblox because this was going to be your venture into the metaverse. Then he was buying it at 125. And then right there, about June of 2021, he's like, you know what? I got this one wrong. I'm not feeling this metaverse anymore. And he capitulated. He's like, I'm selling it here $25 for a $100 loss.
It is.
And oh, look at this guy. Oh, look at him. See, that's the face that my wife. That's the face my wife hates. That's drunk high Kenny. Yeah.
And then what about David Zarling makes an appearance at the beginning of that video too, by the way.
Oh my God. Yeah. I don't even know what I'm saying. Just rambling on about nonsense.
There's Zarling there on the left. You saw him?
Yeah. Sober October has clarified a lot of things to me, man.
All right. Enough of that.
Yeah.
John Borman.
I hope you guys have a good time. I love Coronado. Yeah.
What a great time Coronado was.
Yeah,
what a beautiful, beautiful hotel. I mean, I know we've all been there a million times. What a beautiful hotel.
Yeah. Did you go to the haunted room? Did you hear the voices?
No, they're renovating the old part. They're renovating the Victorian one.
Right, right.
We all had to stay like in those side cabanas, which is fine.
Right. Yeah, yeah. Oh, I love that place. My wife and I have been there a couple of times. Yeah, we went to Stocktoberfest, a couple of years ago. That was when Cheddar was getting their start. Is Cheddar still a thing? I'm not sure.
I think they sold it, and then once the people sold it that were running it, I think it's
Gotcha. Yeah, but the Josh Brown bottom, it lives in infamy. We have it. Oh, that what a pivot that was. Also, the Kathy Wood top. I never heard of Kathy Wood until everybody started talking about her, and I started looking at what she owned. I'm like, these are all COVID stocks. They're all going to crash. Who is this lady? She's going to really feel a lot of pain. And that was when me and Garrett Baldwin, we were talking about it, like, yeah. And we started shorting Zoom and what was it? Teledoc.
Yeah, it's weird. I don't know. People love this lady. She's lost investors more money than any investor in the history of the stock market. So
yeah. Cool. Yeah, I mean the Qs are where to go. Just Big Al should start his own hedge fund. Just give him money, he'll take some of it and buy the rest with the Qs. We've been long the Qs since 2003, and that's my story. I'm not changing.
Kenny, I would like to recap. You've had a pretty good week here. Yesterday was the Boeing thing, right? You want to talk us through that for a second?
Yeah. I mean, I got a couple more for this morning, but each morning we always have those few weird stocks. The biotech stocks, the low float ones, and we caught another one today. There's a ZENA. If you want to look at the chart, I don't know if I have the charts up yet, but there it is.
What's that?
Yeah, and this is just another indication where you don't have to be the first one in. I wake up around 7:30. I'm not looking at these charts yet. I got to get a cup of coffee. So me and Jen were in the room early. There's not that many people that are in the room at 7:30, 8 o'clock. But I was explaining to her, I was like, hey, listen, if this one now it's fauxing and showing, but now if it gets back to the VWAP and starts to bro, so the faux show bro, I was like, now's our chance. We could buy the stock with a 9-cent risk. So we're buying it here at 250, and luckily we didn't even have to worry about it because it never did pull back. And 250 got us. Again, this is where that gambler's mentality comes in. Oh, why did I take profit so early? If you don't take profit on these, you're usually going to lose. So we started selling at 262, 275, and then by 295, we're almost done. and then we got a little bit overshot to the 3 and change. And then look, you got another chance to buy it when it holds the VWAP from on top. That's how you define the risk. And that's what we've been doing in the chat room. Like the Boeing trade, the Boeing was phenomenal yesterday. Here it is. The reason we're watching Boeing specifically because of earnings. And I was telling people to look out for this chop at the beginning of the day, right? So, but if you really become skilled with us and you know what the 1 minute multi-day VWAP reversal trade looks like, let me show it to you right here. You'll see it a little bit better right here. So you broke the VWAP here, and I like stocks that are breaking the VWAP, and immediately got to the orange line. So we're cashing out right before the open. And as I explained to people, the open can make morons out of all of us because you get this crazy chop when all that influx of data comes in, and all the volume comes in. So once it broke under the VWAP and broke the pre-market lows, we shorted the stock. And that's why I love doing this live, because within 5 minutes of saying how we're long, we're saying, hey, we're getting out, and now we're cashing out on a short. And then if you miss the short, now's an opportunity to buy it long, clearly defining your risk, and we got long the stock. So really great action, and we got all the way up to where we thought we can get, that 161. But I want to show you the Coke. The Coke was really, 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 really interesting because it was so boring and just so boring. But you got the faux show, bro, and we bought the stock right here at 68, and the target was, again, it's adjusted now. It got right to the orange line because blue line to orange line, that's how we trade. And it was just a very boring trade. And look where the sellers were waiting for us, right there. And we just nailed this trade from 68 to 68.70. That was us selling it up there and just sold off into the close. So it was just a great day. And I was glad that you kept the room open all day so everybody could see. There's always action throughout the day. The market is just so active. It's more active than I've seen it in a very, very long time.
Are you finding more opportunities, you think, than you are? Like you really feel that way?
Yeah, you know what? And again, it's almost like overkill. I used to use scanners that would try to find me ideas. You don't really
How
need
many scanners does one actually need, Ken?
Right, exactly. And we're having this conversation in the room this morning. The scanners that you need are just the high volume scanners, the unusual activity scanner, because then there's volume coming in. And once you have the volume coming in, you go back to what we know, price action and volume weighted average price and prior day VWAP. So the scanner, again, some of those scanners, when they say, oh, we're going to find you ideas and this is where you're going to buy it, it's never that easy. And then it's just overkill. You still got to know what you're doing because the scanners just sometimes just give you the idea. You still got to know where to put those stops in and know where the stock's going to go. It's never as easy as they make it seem on the TV. But, that's why I love doing it live. Yesterday, we were trading pretty much from 8 to 5 o'clock in the afternoon, especially when Tesla came out. So just a very exciting time to be a trader. And, there's always these crazy, weird biotechs every morning that gets the juices flowing. But then I go right back to the earnings plays. So many trades. And somebody just mentioned UPS. Let me show you what I'm looking at with UPS. Again, I'm not a gap and go trader, but, I was just building the ranges. And as I explained, again, we're going to do a class probably on a Saturday sometime in November where I'll explain the blue line and the orange line. That's simple. That's the VWAP and the prior day VWAP. But then it comes to ranges, so I like the short stocks that are gapped up on earnings, but I wait to see it roll through the range. And this one's telling me don't do that. But when it broke, this is a double, triple top. So I said, hey, listen, if you want to buy into this, buy it at 143 because chances are it's going to go to 145 because that's the rigging. And there it is at 145. So basically, again, if you've been trading as long as I have, originally option trades, you only had monthly option expirations, and it used to be 2.5 point increments, sometimes $5 increment trades. You never had half point increment weekly options, let alone daily options. So stocks still tend to trade in those big ranges. So 440 gets you 442.50, 442.50 breaks, you get the 145. I meant to say 145. And there you are. So now the sellers are going to show up here because that's what the market does. So the 142.50 players are selling here at 145. They'll keep their stops at 142.50. So now if it rolls over, breaks the 142.50 later, that's when we see where the VWAP is, and then maybe we get a short off on UPS. Again, we're just reactionary traders. We don't need to speculate. We wait for these trades to set up, and then we hit the button. And then, I'm off to play pickleball early today, so I'm out of here by 11.
You still beating up on the old ladies there, Kenny?
This one woman yesterday, she kicked my ass. She was an ex-tennis player. She's from London. Wonderful woman. She turned out to be somebody in finance. She runs a website that helps women in finance and annuities, not annuities, whatever, estate planning. We're actually going to have her on the schmooze a couple of weeks. So I love meeting people. That's why my wife doesn't play. She's mean. She doesn't want to meet people. I'm not there to meet people. I'm like, hun, that's kind of what pickleball is mostly about. You're schmoozing with people as you're beating them in sports. But yeah, it's been a fun time. I just love seeing my father. 80 years old, still kicking ass on the pickleball.
All right, hit the bid.com.
Nice job holding the fort down while we were away, Kenny. Appreciate you.
Oh, he loved it. Yeah.
I got two slides there to just follow up on what Kenny was talking about there. Yeah. Slide 2 and 3, just quickly there, Spencer. This is showing the rolling correlation among S&P components, which I think speaks to what Kenny's talking about. Like all these opportunities that he's been seeing. The relationship between, when you go stock by stock, the relationship amongst them all with respects to how they're behaving with the overall market is as low as it's been this entire cycle, which is typical of a bull market that's now over 2 years old, right? When volatility spikes, correlations shoot to 1, right? And then over time, as that bull market ages, these correlations come off. So you're finding less correlated opportunities, more less correlated opportunities. So these are the 6-month rolling correlations. Look at the 52-week, just so you can see that. So this is 252-day. Just follow to the lower right, And what does that mean? I think that means that there's going to be great long opportunities, and I think there's going to be great short opportunities too, by the way.
If I could summarize this chart in one cliche, this chart says it is a stock picker's market.
Thank you, sir. That's right.
Okay.
Good way to put it there, Spencer. Well done. Well done, my friend.
Everyone drink. Let's bring on today's guest.
The other argument is, when is it not a stock picker's market? But this is right. This
I don't know.
Even more so, right? That's right.
All right. Let's bring on John.
Do it. Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
John Salama, man, how are you?
Good morning, y'all. I'm doing well. How are you guys?
Oh, just nursing a hangover from a few days down in San Diego.
I saw some of the pictures.
It was a rough one Monday night. Rough one. It was, bull market parties, champagne, steaks, sushi, chilaquiles. They got Mexicans down there. Me, I love me a good Mexican.
Same.
Good. They got Mexicans for days. You can see Mexico from my hotel room. That's how many Mexicans are around there, right?
That's a beautiful view.
Good eating, man. These Mexicans do not mess around, dude. Oh.
See, it's flavor. Best food. Maybe the best food.
And I don't have Mexicans by me. It's very sad. It's very sad. All right. So, when I see you at a bar, which that's usually where I see you, and we start talking markets, I'm thinking about like what can change these trends, right? I'm always thinking about, the trend is in place. This is what we've been seeing, sector rotation, yada, yada, yada. What is going to happen to totally derail these trends? And in which case our approach to the market would most likely change dramatically. Right? Like, how are you thinking about these trends a couple of years into the bull market?
Yeah, I mean, I brought some charts here. I brought the best 8 absolute trades of the past 52 weeks. So we'll get into it. I don't see a lot of the trends reversing, but stuff that could put us on our toes is heightened volatility ever since the August 5th Nikkei Japan crash. The VXX I've been looking at has had a little bit more of elevation. We haven't put in new 52-week lows on that, even though we have new 52-week and all-time highs in SPY. So typically you want to see that relationship. But obviously we do have a major, event in 2 weeks here in the United States. I do think you'll get a vol crush after that. Goldman put out a report yesterday that said don't expect too much of a vol crush, but I do think you get it. Another thing is, perverse movement in the markets. The Fed cut rates, right, on September 18th. What happened in the middle of the curve? You see rates now ripping for about, 5 weeks or so straight. I think that could potentially reverse some trends, or maybe not. Like you said, it scares me sometimes. Rotation is the lifeblood of a bull market, but it scares me when I see semis start to take a knee and start to get a little bit weak, and it makes room for home builders. It is good
but it starts to scare me a little bit. It's like when you see LeBron start to score less or something, and then Bronny is starting to take over. You're like, wait a second, this is new. I'm not really familiar with this.
Yeah, I don't think that's what happened.
No, not yet, not at all. I don't think it's gonna change, man. I think you got to stay long and strong of these trends, and more so, I think you said it actually a couple of weeks ago. It was great. You said these people were arguing, analysts, sell side economists, everybody about the hard landing, soft landing, but they missed the takeoff. And here the bull market's 2 years old. We did 23% per year. Growth is the story. I don't see us avoiding that, man. I think you just have to stay long and strong. It sounds ignorant. People always sound smart when they're bearish. You're right less than 10% of the time. So I would just stay long and strong.
Yeah.
New all-time highs. I remember being at a Bloomberg event in December, and the woman was like, no way I buy this market right here in December at all-time highs. I'm like, yeah, you absolutely do, because it's going to get more all-time highs. And then 3 weeks later, it's like, oh, I'm down 4%. I could have bought more. It's just going to be the same old thing.
Yeah. And what was she so scared about that she didn't want to buy the market?
Just too expensive. She didn't want to pay up. She's like, oh, but the PEs next year, the estimates aren't going high enough. I'm like, just stay long, dude. It doesn't matter.
Estimates of what?
Yeah, S&P earnings next year.
Can you imagine like what kind of serial killer you need to be to dilute something as pure and factual as price with something as arbitrary as an earnings estimate? Can you imagine like what goes through someone's mind that would do those kind of things? It's weird, right?
Jason, you would love these fact set reports that I used to peruse that they do during earnings season, where they go like, they break it down by sector and they tell you which percentage of companies in each sector beat or miss estimates. It's fun. It's fun.
John, we've got a sector rotation model that is not public, or at least not public yet, but something that we really like internally, where we're looking at all 11 S&P sectors. And it's a sector rotation model that is, weighted towards relative strength and momentum.
Great.
But the kicker is that the Bitcoin ETF is the 12th ETF. And we adjust for volatility by if the Bitcoin ETF is in the top 3, then we'll have 4 holdings.
Oh, I see.
So we're only taking the top 3 holdings of those 12 ETFs. But if Bitcoin is one of them, then we're taking the top 4.
Got it.
So I just want to hear your thoughts on that overall strategy. And then people are like, well, Jay-Z, your sector rotation model is cheating because it has Bitcoin. It's like, all right. Are you just sad that yours didn't have Bitcoin? So anyway, I wanted to hear your thoughts on all that. I figured it's right up your alley.
I love that. It diversifies. I guess one of the risks much later on would be if MicroStrategies grows an intense amount leading Bitcoin, and then you have a little bit too much diversification. I love what you did there, adding a different sector, and then you almost basically gave it a little bit more room. And honestly, it was the first chart I had today was GBTC, which is the best performer of the past 52 weeks. I hated buying Bitcoin for the longest time, dude. When everyone's melting up and things that have earnings and growth, I didn't want to buy this piece of junk. I was bitter. I bought it about like 6 months ago. It's done nothing. Of course, what 6 months ago was. The highs right around 73K. It was 7 months ago to be exact. But this is the top performer, specifically through the GBTC, up 114% from last October. I like doing 52 weeks instead of year to date. It just gets you a little bit more time frame. And let's not split hairs, which I don't have much to. But it's an extra 9 weeks. I like the extra look back. Look at the 200-day moving average here. Really an important tussle. It's similar to what we said with volatility. It has a different leg since the Japan crash. Look what happened with Bitcoin through GBTC after the August 5th candle there. We've now, it's not in no man's land. The trend is somewhat, disturbed. It's a little bit different from where it was, but it's still one of the absolute leader from last October. You should understand. And obviously you do know that this Bitcoin was at 30K last October. So to me, last I checked, that's more than a double. And you got to stay long if it obviously starts to break, specifically GBTC here, under that $51. Looks like it can go back and forth. We'll see. But I think you're going to have that end of year everything rally, and it's going to lift this. You want to own Bitcoin. It's at 66K, and the all-time high is at 73. You got to own it. In terms of investment,
you got to own it right here. You don't wait for a breakout.
I feel like if you buy the breakout's going to be like up 12% that day. The volatility here is kind of diminished in it. I would probably just start a position here if you need to. For me right now, going back to what you were saying too about that chart with the correlation, to me the investments, I know people may not like this, but it really is like a roulette wheel more than ever in terms of you want to have so many different pieces on the wheel, dude. I bought FXI this past week for the first time in 2 years because I was part of the uninvestable crowd. I bought it this week, dude. So there's just a lot of it. I bought stuff I haven't had before. I'm in healthcare. I'm in FXI. I'm in a biotech. I'm in a utility. This is bull market stuff. It's not just, I need to buy NVIDIA. I need to buy JPM. And I need to buy, whatever. Pick another one.
How about that Economist magazine cover telling us that the U.S. is the envy and is going to continue to outperform the rest of the world? I don't think so, man.
That's fine. That it speaks to what we were just saying. Yeah, I don't agree. I don't agree with that either. Yeah. So yeah, I used to have a bias on EEM once it was so heavy in China, and EEM's a star here. I went for FXI for a little bit more risk. But yeah, EEM's a great investment too. It really is a roulette wheel. Place your pieces, everything. I love the S&P Top 50. I obsessively buy it, but you got to have other investments. Yeah.
I like where your head is at here on the China. So you had the massive rip, the biggest, 1 week rate of change in the history of the Chinese stock market, right? Then you let it settle down and then you get in like that, right? I don't hate that strategy. I mean, that makes a lot of sense.
Exactly. So the volatility was massive. FXI went, I think, from 27 to about like 37. The
252-week low to new 52-week high, and like that.
Dude, yeah. So I have a macro show on YouTube 3 times a week, and people were asking, like, what do I do with this? Can I chase it? I'm like, yeah, you can, but understand that this could very well gap down 4% the following day, and it happened one of those days. So exactly what you said. I waited. The stimulus was announced about 4 weeks ago. I wanted to get that updated 21-day exponential moving average. And then just this week, once that 4 weeks happened, I saw KWeb in both FXI and A share and MCHI and all the relevant A share classes were holding the 21 EMA. I said it's worth the punt, and I bought January at the money calls.
Woo! I like it, John.
Yep.
Are you guys listening? Are you guys paying attention? Take notes. Well done, John. All right, what else you got?
It's time. All right, so Bitcoin, you got to stay long. It's having a little bit of a rough time. You got to stay long. Number 2, this one was back and forth on the past 52 weeks due to the crap that home builders has had with the rally. But SMH is the next one. It's still your second best performer. Semiconductors, NVIDIA obviously powering this a lot with their new all-time highs, breaking 140. If you put on the SMH, a better chart than Bitcoin, you have to say respectively. Even with more recent highs, the Bitcoin was in March. This 7-11 were these highs. See the line here. Yeah, so August 5th had a little bit of a crash, the semis. That was only your second time of the entire past year. To me, you got this on sale, the semiconductor group. It was during the Nikkei crash. And then you had that scare right before the Fed, when you remember we were oscillating there, and the SMH here got right around 200 right here. So I want to hear your thoughts on this. The highs are back here all the way in July. My targets for this, upcoming is about 265. What does that say for you? You're building, a long rectangle box as it bases, and then when it breaks out towards the end of the year, we're going to go soaring. What do you think about that? Because we have been, kind of basing, but still rising with a nice slope.
Yeah, I mean, the underperformance from technology really stands out. Tech down for Q3. Semiconductors on a relative basis have been front and center with that underperformance in technology as a group. I think you're continuing to see rotation amongst industry groups within technology out of semiconductors into things like software, for example. Money moving down the cap scale in technology as well. So that mega cap tech, really the underperformer out there. So, you're asking me what I'm thinking here in semiconductors. I think they're messy. I think they're an underperformer. I think I would rather be in individual names versus the basket. I think the bifurcation, the dispersion, there's your SAT word of the day, the dispersion amongst semi returns, I think continues to widen probably.
Yeah, the service group has looked extra strong. Oracle, ServiceNow, that has gotten a lot of dollars. I totally agree.
New all-time highs on the iShares software index. Palantir, right?
Palantir is just a little engine that could, and that's one of my favorite.
Not so little anymore, there, John. No, not so little.
Not so little. All right, let's keep going. This is important. This has had an absolute crush. This was number 2 up until last week. XHB up 66%. Obviously, it's just gotten pelted. You're talking about 52-week highs to recent lows. Let me see when it pulls up that chart. So look at this. Look at this. There's 4 candles. This thing was ripping, sitting very high. The Fed cut, 5 weeks ago. This thing continued to march along, and then 4 days ago, all the way from the top Bollinger Band to the bottom. This the unbelievable chart, better than the previous 2. Never oversold. Long period of being overbought back there last fall, last December. 200-day moving average. It didn't even bucket during the Japan Nikkei crash in August. I think an absolutely tremendous chart. I am long IYR, which has not been a massive beneficiary of this. Obviously, I think there's home builders, there's ITV. This is where the alpha has come from in the past year. Both of those ETFs are up about 65% over the past year. So absolutely just ripping. What do you think about this? And in terms of the rate story, do you think this comes as down as low as the 200-day moving average? Do you buy it right here? Because I'm getting close to buying it right here. In terms of time, I think it can go sideways for a while, but I do like the support at 117. I like the risk reward up down. What do you think?
Yeah, I'm with you. I mean, home builders have been such a leader, particularly in the consumer discretionary space. So with discretionary being such a massive underperformer for so long, my bet this summer was that money was going to rotate back into consumer discretionary, and it has. I think it's got like the rotation we're seeing in semis and in technology as a group going into software. I think there might be similar rotation happening within the consumer discretionary space too.
Yep.
Those former leaders, homies, semis, and within the group, maybe getting rotated out of. What do you think about that?
Yeah, there's a lot of rotation under the hood. It's interesting. The nuance is, like you said not get out of semis, but you'd rather be in software. Then we're talking about consumer discretionary as a big basket. And you're saying, oh, wait, now we're looking at the home builders piece. So there's always rotations under the hood, and that's not bad. That's why going back, putting a button on and putting a circle on this thing, when you talk about your sector rotation and you introduce Bitcoin as a 12th sector, a lot of the sectors are buys. Even utilities had a rip-roaring year.
Look at retailers, on an equally weighted basis. Look at XRT, like big base,
Huh?
I really like that.
Absolutely. All right, we got time for a couple more, right? I got a bunch more.
Yeah, let's see it. It's great.
All right, GDXJ, the 4th biggest return, and I always do this on the show. You can always do single stocks. I know people are cracked out and addicted to that. The best way to do it is look at the returners in the ETFs, live on that 52-week high list, and then drill down from there. So if I'm talking,
are you guys listening? That's exactly right. Spot on, John.
That's where you get the meat. That's where you get the best of the best. If you're saying, and I know like Carvana is a great stock, cool, roll it up and see what it's actually from. So consumer discretionary, and then, automobiles and so on and so forth. Go top down. So that's why I do it. And if I love home builders, I strip out my favorite home builder from there, or even the biggest weighting. If you want to be lazy, you can just pick the biggest one. You got the best and brightest, as it were, from the ETF. All right, GDXJ. Here's another one. Ridiculous chart. Different from the other ones. The other ones, Bitcoin, semis, and home builders have had, bottom left of your chart to top right with a 200-day moving average holding for pretty much every session minus, a week or two. Gold and gold miners really had their sentiment change back in March, April. It really started to steady. You see the 200-day moving average stop going sideways and start to elevate and really have some slope. And this chart just looks nothing bad here, dude. Just higher highs. Looks great. 52-week high the other day. I am long GDX, DEES in the money calls at this point. I think the trend is your friend. This has to go with government spend. I also like that the gold miners themselves, a lot of them are hitting 52-week highs. Obviously, you have a lot of crazy movements with the dollar and yields. I typically would not buy gold miners, but this place looks awesome place to stay. Your thoughts?
Again, getting back to relative strength, the metal has been where you want it to be, not in the companies, right? What Mark Twain, gold miner is a liar standing next to a hole in the ground. As I've matured and gotten older and wiser, I've learned that to absolutely be the case. So I'm looking for that outperformance out of the gold miners that we haven't seen. You may have started to see it. I think that the outperformance out of silver more recently probably speaks to that. one of the things that we hadn't seen yet in this bull market is silver outperforming gold, right? Which tends to happen in healthy market environments for precious metals. Hadn't seen it yet. Now we've been seeing some of that, right? I think that speaks to the gold miners as well. And just generally speaking, secular bull market in gold, in precious metals, these mining stocks are going to do well. And not to be a cop-out, but I like these names and have on an individual basis versus the index overall. There have been huge winners in the mining space, while the index of the miners has been a dramatic underperformer, particularly relative to the metal. So, again, not to be a cop-out, but the winners have been in the individual names. I think that's still going to be the case. I think you're better off in the individual names and being in the miners. Make your own basket. Make your own basket. Pick 5, 6, 4, 10. Right? Like I love you, Jan Van Eck. Like you're the man. Thank you for the parties that he's invited me to over the years. He's the man, but not necessary in this particular case. Not necessary. Pick the relative strength. There've been big leaders there. I think that remains the case. And these things, and we've seen these bull market cycles before. I mean, you'll see the gold miners up 50% or 100% in a particular cycle, and these miners will be up 10x that. So, right, if you're going to miss out on the upside of owning a gold miner, then why the fuck are you buying a gold miner?
Yep.
Go buy Coca-Cola or something.
Yep.
That's how I see it.
All right. Yeah, great. Yeah, I'm also staying with the metals. I was just doing a return basis. Silver looks great. I see some stuff in the chat here. Silver, the metals. Also get diversified benefits, of course. All right.
All right, give us one more, John. What do you got?
Last one. All right. I know you're going to like this one. Let's go to KBE. Also a position of mine, up 57%. This is a tie with the gold miner juniors, 52 weeks. Absolutely crushing it. Of course, both are related to yields, economic growth, right? So KBE up 57%, absolutely stellar chart. It's essentially basically where we were during those July highs. JP Morgan ripped it starting last week, I believe, or 2 weeks ago when they kicked off earnings. And yeah, I own the D's in the money calls now on these. I think the trend looks great, even with yields where they are, bouncing around the middle belly of the curve going higher. This still looks to perform very well. Had a rough week this week, with, net interest debits and everything else with these firms, some of the regionals, but looks like a great chart, and I would stay long.
Do you think that the relative strength we've seen out of the banks in particular, not the big money center banks, but the mid caps and the small caps, really getting going as the betting odds have started to price in a Trump landslide? Do you think that those are related? Because for me, when I try to think about, wow, are these poly markets and them, are they being manipulated? When I look at what's happening in the equities market, and what's happening in the equities market from my perspective is essentially confirming what the betting odds are suggesting. It leads me to believe that they might not be manipulated, and the betting markets are suggesting the same thing in the stock market. And I think it starts with the banks. Would you agree with that, or you think it's just a coincidence?
Maybe coincidence. I don't know, man. Like everyone always says stuff like that. I mean, before when we thought Trump was going to win, everyone thought the market was going to crap. And what happened with the futures that night? They were up. I don't know, put too much faith in that, because then they were saying the same thing about Bitcoin. But if his odds were going up, soaring to be guaranteed winner in 2 weeks, then shouldn't Bitcoin have been crushing and thrusting to new highs as well?
True. I mean, it's done pretty well, but yeah, you're right. You would think it'd already be ripping. That's probably true.
Yeah, I don't know. I think the banks, I think the earnings were really good too from the banks. I think the trading has gotten better. I think they're having less difficulty, maybe having customers get picked up and maybe potentially less money on the sidelines for them to invest. I don't know. I think it's an overall growth story and potentially maybe some growth and good things from China, Japan, and India. I just don't think it's a bad thing. Maybe coupled with the Trump thing, but I don't make too much of it either way.
Love it, John. Listen, I appreciate you. Thanks for coming by. Dude, you bring it in the charts. Spencer, great guest. Great guest, John Salama.
We appreciate the charts.
We appreciate you, my man. Thank you, sir.
That's what we're here for. All right, heal up, buddy. Kill that whole hangover.
Yeah, seriously.
All right.
Dude, John Salama, he's the man. I'm getting hate from Chart Guy. Poly market is one of many Republican desperation plays. Sad that JC gives this any weight. It would be sad if I gave it too much weight. But when you look at the other betting odd markets that are arguably not Republican desperation plays, whatever that means. Predict It is saying the same thing. Trump by a landslide. Kalshi is saying the same thing.
We'll
Trump
find
by a
out.
landslide.
We'll find out.
Yeah, we'll find out. So like at the end of the day, we're trying to make money off it. I don't give a shit who your president is. I'm trying to profit from the situation. And maybe poly market is exactly what you're saying. But then why are the other ones saying the exact same thing? And why is the stock market pricing that in too? I'm asking questions.
Can we talk about McDonald's? I think we have the chart. Fonz, you should have the chart because it was your chart of the day yesterday. So
dude, Jeff Mackey's so good, dude. Yesterday he's over at the studio and Jeff is like, we should have done the E. coli challenge and we should have had the burgers. Dude, he's the man. Jeff Mackey really is the man. He really is.
This chart makes yesterday's candle look a lot worse than it actually was, I think. Because yes, it opened way lower, but like if you were in Kenny's room, you saw it, right? Or just watching the chart. This thing pretty much trade to higher all day, more or less, right?
Yep, it just retested those former resistance levels from the last year and then bounced right off of it. So if you've been looking for an entry point in McDonald's, the E. coli situation is your entry point.
Yeah, and Fonz, you were also like doing it because you were talking about the Chipotle thing, which was yes, I guess Chipotle. It did sell off on the E. coli thing when like 10 years ago, right? But then it like came all the way back and then some, and it was a huge buying opportunity in the long term, right? The E. coli thing for them. So I don't know. I think he was telling, again, not so much the news, but the reaction to the news says everything to me. The fact that you had buyers coming in all day yesterday kind of tells you all you need to know, right?
Yeah, almost like it's a bull market, right?
Yeah.
You know, one of the things that I hadn't thought about, when it comes to global markets, and somebody said it, who was it? I thought that was so well said. When you're looking at emerging market, when you're looking at Asia, Southeast Asia, you got the two extremes. So on the north, you got Japan, and then on the south, you got Australia and New Zealand, right? So you got your developed nations on either end. And then all the emerging markets in between, with Singapore right in the middle, right? And they're all shooting out from there. Like, I hadn't quite thought about it like that. The developed extremes, Singapore in the middle, you can argue is developed, and then shoots out to all like the satellites around there, like Vietnam and the Philippines and Kuala Lumpur and Indonesia, right? Had you thought about it like that?
I guess I don't really know what you're saying.
Like the map of the world, the map of Asia. The extremes are the developed nations, Japan, and then Australia and New Zealand at the bottom.
Geographically?
Yeah, geographically. And then in the middle, you got Singapore, which is developed. And then it shoots out the satellites from there. I don't know. I just thought that was a fascinating way to think about Southeast Asia. As many times as I've been there, I hadn't really thought about it like that.
Oh, I guess. And neither have I. So the middle is where the action is, because the end points are too developed and too boring.
Yeah, I mean, Singapore, 50% of Singapore is financial services.
Yeah, we were talking about that NU in the room yesterday. Kenny brought it up, and
NU's Brazilian though.
Oh shit, you're right. Oh yeah, that's right. I'm confusing Nucor and Grab. We're talking about Grab too. That's where that came up. Yeah. Anyway, okay, whatever.
Grab, big base and Grab, big breakout this week. Looks great.
Mm-hmm.
I was Strazza for a few days. Every day he's like, sold another double today. Sold another double.
Yeah. It's been working for him.
It's a bull market, my friends. It's a bull market, in case you guys aren't paying attention.
Other things on my list, I'd like to comment in the chat earlier about UPS. Yes, UPS loves to take credit when things are good in the overall economy. Actually, UPS, if you look at their last few, look at their earnings reactions in the last year and a half, right? UPS, they've been pretty disastrous, right? They just gap down. Today they're gapping up. It's up 10% this morning for UPS, so good for you guys. But yeah, this thing has been a train wreck on its last 4 or 5 earnings reports. Not good. So
Dude, this Tesla is up quite a bit. This Tesla is up.
yeah, 15%.
Yeah. What a
Right?
move.
No,
It's up 16% right now. What a move.
yeah.
Are we
and
having
then,
Sean in today? Is Sean back home?
yeah, I think Sean got home before you all did.
Yeah. I stayed yesterday. I had meetings all day. It was good. What a great town, San Diego, man. Psst. Danny
Yeah,
Jassy, we had a nice bull market dinner last night. Danny Jassy, Patrick.
that Coronado Bridge is an interesting bridge because
Yeah,
it
it
like
goes really high.
it like goes up. It's weird.
Yeah, because they need the ships need to go under.
Right. Well, yeah. Right. Yeah. So it's a cute town. Cute town. Fun little. I guess it's an island, right?
I
don't
love
know.
it.
Yeah. All right. So yeah, we'll have Sean on in a second. What else was on my list here? UPS. I don't think we have the chart ready, but I just thought the reaction was interesting. Big mover of the day is QuantumScape. Dear Lord, this QS. Talk about stocks of yesteryear. This thing is up 27% this morning. What did they even say in earnings last night? Oh my goodness gracious! In earnings last night, it's up 27%.
What's the ticker?
QS QuantumScape. This is like is it EV charging? Is that what QuantumScape is? I don't even remember it. It's been so long since this was like a stock that I looked at.
27%. Wow, it's $3 billion market capitalization.
Yeah, no, it's not nothing.
Technically, it's an auto parts, but
Yeah,
you're telling me it's a little more fancy than that.
Charging, I want to say. Bill, am I right? Pretty sure I'm right.
Yeah, lithium battery. Yeah,
Oh, the batteries. That's right.
the battery company.
God damn.
How about that?
What else is moving today? The company formerly known as Bed Bath and Beyond, which is now just called Beyond.
Is it?
Yeah, it's a $340 million company, but it's got a ticker and everything. Down 21%.
Oh,
They still email me because I have like $5 in rewards I haven't redeemed, and they email me like once a month.
I was talking to Pat last night. Patrick's father bought one of those. What are the big Teslas? What are those? Like
Yeah,
really
the
ugly ones?
Cybertrucks, right?
What is it called?
Cybertruck.
Cybertrucks. So Patrick's father bought a Cybertruck.
Right.
And so Patrick was telling me, he's like, dude, and I've never had a Tesla. I've been in like one or two Teslas my whole life. Patrick's telling me that the way to get bullish Tesla stock is to look at your credit card statements as to how many times Tesla charges you for things.
Oh, really?
Like between the gas station and like some random charges that he gets in his car. Like he's like, dude, my credit card statements are so many Tesla charges. He's like, that's why I'm bullish Tesla.
Oh, the charging system. Interesting.
Isn't that interesting? He's like, dude, they're digging me for all kinds of shit.
It's all like upgrades and subscriptions, right? Like they charge you for like every little like nickel and dime you, right?
Yeah, that's what he was telling me last night. I was fascinated by it. I was like, wow, that's great. We should buy more.
Also, that's like the future of like cars. Is like everything is going to be like a
computer.
Oh, you want your heated seats year round?
That's right.
For your subscription. Right?
That's right. No, that's right.
That's where exactly it's going. Right. Sadly,
I mean. If you can't beat them, join them. If I'm a shareholder, hell yeah, charge them more. Let's go.
I mean, to a certain point, sure, but no one likes being charged for things that they used to get for free. So
we'll let the market figure that out, huh?
Yeah, that's true. That's true. All right. Did I hear Sean? I did hear Sean. Sean is here. Sean is here. Here's Sean. So let's bring him on.
Do it. Shawnee, baby.
As a Tesla owner, I could tell you Patrick's doing it wrong. A big reason why he's getting a lot of charges is because he charges every time at a supercharger instead of charging at home like a normal person. And the superchargers are not meant for everyday charging. Yes, you can do that, but that's not what they're meant for. They're meant for long road trips. He's doing it wrong.
He drove across the entire country from San Diego to New York. And he says it wasn't like a problem at all.
No, it's great, man. I've done some long road trips and it's no sweat. It's great.
Love it. I drove. Danny was driving us around in his M2 yesterday. Dude, that thing moves, man. That thing is a little scary.
What? I don't know what an M2 is. I'm not a car guy.
They don't make them anymore. It's like an M3, but they only made a few of them. But it's like a little bit smaller than an M3. But that thing moves, man.
Who makes it?
BMW.
Oh, okay. See, I don't know.
What do you mean? Who makes it?
Not a
M3?
car guy.
All right, Shawnee. What'd you think of San Diego? You have a good time?
Oh, I always have a great time, man. It was like kind of nostalgic to go back to where it all started, Stocktoberfest. We used to do that every year. It's been 5 years off, and got to see a lot of the old gang. It was great. Some great content, except for yours, but everything else was great.
I gave you a shout out. I was ripping Michael Batnick up there on stage.
Well, he's the king of the fanny pack, so he deserves it.
No doubt. We never went to the tavern. I think this is the first time I'm ever at a Stocktoberfest where there was no cocktail at the tavern. Did you go there?
I did not. I walked past it a few times. No, but did not. Look, it's a great event. The people that go there are great. We met, obviously we saw some old friends, made some new friends. Stocktoberfest in the beginning was all about community, right? It was about celebrating the StockTwist community. It was bringing the voices together, giving them a platform to share what they're working on, whether it's, trading ideas or fintech or things that serve that community. And that was great. So having that reminder that community is important is always great. And you know what? I'm on this riff right now because we have a community here, right? With the people who are involved in our circle, All-Star Charts, Stock Market TV. And, we were away. You, me, and Strazza were away for a few days. And we've got a chat room here for the All-Star Options subscribers. And you know what? While I was gone, man, the community that we've got here was just killing it. They were throwing out ideas. They were putting up options ideas, P&L charts. I mean, there were so many great ideas being spun in my absence. I was just kind of blown away by that. And shout out to my community and All-Star Options.
It made you proud, made you happy.
It made me very proud. It's like my kids all grown up, right? They were all grown up. They're doing well. They're taking care of themselves. I mean, there's some guys had some great ideas in there. Some money was made. I mean, man, just awesome. So that's what community is all about. Stocktoberfest, that's what it was all about. So, I mean, it's just great to have that all happening this week.
What any trade ideas from the conversations? I had a lot of great conversations over the last few days with smart people. Any trade ideas that came out of these chats?
Well, I will say that the prices that the Del Coronado charges for things made me very bullish on hotels. So if they're getting away with those prices, then we need to be looking into the hotel industry.
Wait till the renovations are done. You're looking at $2,000 a night, bro. Watch.
Oh, I have no doubt. I think if you wanted room service breakfast, it was like $85 or something like that.
Dude, I paid like $8 for a water. I swear, multiple times actually.
Yeah, I think Brian Lund wanted a beer at happy hour one night. I think he paid like $18 for his beer, and I was just like, man, I don't know.
Yeah, it's a little.
So bullish hotels, I guess. I'm bullish hotels.
Yeah, it's a bull market. You know what I'm saying? So, for me, I thought that the conversations around uranium, people were into that.
They're jumping on our trade, JC. We've been talking about uranium for a couple of weeks now.
That's right. And I didn't sense too much optimism. I think people were aware that it's a bull market. I showed them a lot of international stocks, and they didn't know that these indexes were doing that, so they're a little surprised by that. But I would have thought that there would be a little bit more optimism in the crowd, and I didn't get that. Did you?
I felt like people were cautiously optimistic. It's the topic of conversation in a lot of corners was obviously the election, and we're still in the middle of earnings season. So I just felt like everybody was pretty cautiously optimistic. The general thought that I had, which by the way is information, and maybe we should be leaning the other way, JC, but the general feeling I got from people was that once the election's over, then it's moon, right? Bull market. I don't know if that's what everyone thinks, JC. I don't know. I mean, my heart agrees with that, or my gut agrees with that. But I don't know, man. The seasoned trader in me knows to start thinking about the other side when everybody's on one side of the boat. You know what I mean?
I just don't think everybody's on one side.
Well, you were talking to different people than me.
I think that the observations in that network match up with what our quantitative data suggests, that sentiment is not frothy. It's not pessimistic. It's somewhere in the middle.
Well, definitely agree with you that sentiment was definitely not frothy. Definitely not. There were very few people there who were pounding the table bullish. You might have been the most bullish person on stage. That whole
Really?
thing. Yeah.
When I'm the most bullish person, that's usually not a bad thing for equities.
In fact, somebody came up to me after your presentation, JC, and he said to me, "Man, I don't know. I didn't know about the stock market, but after watching JC, like, man, I'm so bullish now."
Oh,
I went through 150. Lindsay was like literally pulling me off the stage.
You might have been the first person in the history of Stocktoberfest that literally got a hook off the stage.
Yeah.
And I've been to all of them, and I think that was the first hook I've seen.
Yeah. It was good. It's a good time.
what was there? Was there someone to the side like doing this? You know, to JC?
Well,
Not really.
JC was too busy, going through 1,000 charts a minute.
I would have been up there all night. They
But
had to
Howard
pull
was
me
kind
out.
of, well, first it was Nicole. Nicole kind of came up the side, and she was like giving you the stare down, but you were not noticing it. And so that didn't work. So Howard came up the other side, and he was kind of like, lingering around, trying to give you the hint. You weren't catching the hint. So finally, after about 10 minutes of that, that's when he's like, "I'm going on stage."
Yeah.
He hooked you up.
I've been the recipient of that Nicole stink. I used to work with her.
Yeah.
I met her for the first time. She was nice.
Yeah,
She's a sweetheart. She's a
Yeah.
sweetheart.
She was nice. Everybody was nice. Like there weren't any assholes there, I feel like.
Nope, no assholes. It's an asshole-free environment. It's tough to be an asshole at that place, right? I mean, how could you be in a bad mood and be grumpy in a place like
I
that?
thought that same when I was in San Diego a few months ago. I thought that same thing. We were walking on the boardwalk, and people were just like people were just talking to us about, and like the vibes were so immaculate. Everybody was so happy.
Yeah, it's hard to be in a bad mood there. It really is.
Or in such a good mood out there. It's crazy. As a person from like New York, New Jersey, I don't identify with that at all. I can't relate.
I did something I never do. Both mornings I was out there. I went for a run, a sunrise run on the beach. That was great.
God damn. Jealous. Yeah.
Yeah, and New Yorkers get a bad rap. You're like, oh, New Yorkers are rude. They're not rude. They just don't want to talk to you. Like they're just minding their own business. They're worrying about themselves. It's not that they're rude. It's just that you're just in the way. Like,
Yeah.
get out of the way.
I've got somewhere to be.
Speaking of rude, Spencer, you'll enjoy this. My favorite moment of the whole conference. This was my favorite moment. Day 2, first thing in the morning. The conference is just about to start. I stroll in. You know how like in conferences there's like tables, right? Like they have rows of tables, and that's when everybody sits there so they can write notes and stuff while they're following the content. Well, I roll in. I see JC. First thing in the morning. I sit down right next to him. I'm like, "Hey man, what's up, man? How you doing? Good morning. Let's see some stuff." And within 4 seconds, Spencer, JC gets up, walks about 10 rows closer to the stage, and sits down. Doesn't say goodbye. Doesn't say anything. He just gets up and leaves the moment I sit down next to him. What's that all about?
Well, to be fair, I wasn't there to see you. Number one. Number two, on the first day, I sat in the back row with all the cool kids, like me, Brian Shannon, Phil Perlman, Brian Lund, and like we were just like the naughty kids in the back. And I couldn't hear anything because they were talking to me and laughing and giggling like little schoolgirls. So I couldn't hear a damn thing. So I said, not this time. I'm going to be the best student. I'm going to sit in the front row. I wanted to see, I forget which presentation it was, but I was really interested in it. I think it was the meme coin presentation. Shocking.
Well, you just made me feel very self-conscious. I thought maybe I forgot to put my deodorant on that morning. I
No,
don't know what it was.
It wasn't you. It was me.
Oh, you should always sit with people you don't know. That's the whole point of these things, right?
I guess.
Don't take it
I guess.
personally,
But
Sean. It had nothing
it
to do with you. Just
But Spencer, it would have been nice if you just would have said, "Hey, I'm going to go move up front." There was nothing. He just
That
got
would've
up and walked
That
away.
would have been nice, wouldn't it?
Like a total ghost, like an Irish goodbye in my face, like a total ghost.
Yeah, that would have been. Oh well.
Well, get over it.
Yeah. All right, Sean. We have any trades to talk about, or can we jump right to recess?
Let's jump to recess.
Okay. I think we've been doing that already, but that's cool.
Chilaquiles. Bullish.
Yeah, I heard you had a chilaquiles breakfast. I did not. That's a big swing and a miss for me. I do love a good chilaquiles.
This Miss Unique lady is very angry lady. Get that lady out of there. Sorry, Miss Unique, you suck.
Be nice. Why are you so mean to us?
I don't know. She just seems like an angry lady.
No, I think it's just her humor.
So I get very when I don't get what I want, I can be a real pain in the ass. And I found it just, I just found it so strange that they only have chilaquiles for brunch and not during the week. And I was just, that was not okay. It was not okay. So I was very nice. And the guy comes up to me, he's like, I'm gonna see if I can make you a special chilaquiles. I was like, really? And he went back, and sure enough, and they brought me the chilaquiles, and they weren't even making it that day. How good is that? Freaking Mexicans, man.
Yeah, I heard you had a special order. That's good stuff.
I'm telling you, these Mexicans, they kill it.
I did not have Mexican food this week, but I've been on a big Indian food kick of late, and I got in my head that I was gonna make homemade tikka masala last night. Yeah. No. So I'm far from the world's most advanced cook, but I did it. It took me 90 minutes from start to finish, but I did it, and it was amazing.
Good? Really?
Yeah, it was just a lot of steps, and you had to go to the blender and then back, and then the mixing and the a lot of different spices, like 10 different spices you had to measure. And I'm like, I'm a slow, messy, inefficient cook, but I get the job done eventually. And I got it done, and it came out amazing. So
nice.
Good for you, Spencer.
Yeah, again, it took me 90 minutes, start to finish, but it was worth it.
Well, this weekend, I'm setting up for a trifecta, a Shawnee trifecta. I'm going to do 3 things that I love. Number 1, get out on a hike. Number 2, catch up with old friends I haven't seen in a really long time. And 3, see the Buffalo Bills destroy the Seattle Seahawks in Seattle. That's where I'm headed this weekend. Very excited.
Are you?
Oh my goodness.
Yeah.
Wow, nice.
Yeah, heading to Seattle, gonna do a little hike, maybe in Olympia National Park, perhaps. I'm not sure exactly where we're gonna go. I'm going with a group, doing that all day Saturday, and then the game's on Sunday. And then, hey, Monday, shout out Dave Keller. I know a big fan of the show. Gonna hang out with Dave Keller. We're gonna have breakfast up in Seattle. So very excited.
Ask him to come on our show. I emailed him.
I already did. I spoke to him the other day. He's in.
All right.
Reiterate that, Sean.
My email, so I don't know.
Yeah. I will let him know.
Tell him to answer cool. Spencer. Spencer's butt hurt that he hasn't responded yet.
Yeah, guys, the problem is he's on the West Coast. Other than Brian Lund, it's tough to get people to show up on our show. It's very early on the West Coast, guys.
Yeah,
the market's open, man. I mean,
they're traders. Wake up.
But maybe they haven't had enough beauty sleep at that point. They're not awake. They haven't had their 17th cup of coffee. It's a thing.
Whatever. All right. Shoot, I have one more thing I want to say. Oh yeah, have fun in Seattle. I've never been to Seattle or
either vibe
Northwest, so
I've never been either. I'm very excited.
Yeah, enjoy. All right, what say? This Thursday, right? We got our weekly team meeting coming up. We got the options jam session right at noon. Chart request live at 1, and that's the plan. So thanks to John for hanging out. Thanks, Sean, for hanging out. Thanks, Kenny. Thanks, chat. We appreciate you guys as always. We're glad to be back. We missed you. Sending out the charts here in a little bit, and enjoy your day. Go make some money. All right.
Adios.